Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an amazing guest for you today. It's a repeat guest. It's some of the most listened to Fintech Hunting episodes. He's an industry vanguard. He's a thought leader. He has been named one of the most connected people in the industry, and the list could go on and on. Please help me welcome back to the show, Josh Friend, CEO and founder of Insellerate. Josh, it's great to have you.
Michael, thanks for having me today. Good to see you.
It's great to see you. Well, we normally talk a lot of tech stuff and everything, but the market's changing, so I kind of want to start there. You know, there's a report that came out from the NBA in the last, month or so that the average IMB lost $300 plus per loan last year. Clearly, that's not sustainable. I hear a lot of buzzwords of, I've got to streamline my tech stack. I've got to create greater efficiencies. And I know there's a topic that you and I have addressed, and I want to make sure our listeners get a chance to hear about it. Really is, at the end of the day, what I'm hearing is total cost of ownership of technology is something that lenders really need to start focusing in on. Talk to me about total cost of ownership and some of the discussions you've been having with lenders recently.
Yeah, I mean, so total cost of ownership, it's like, I guess it's like owning a car or a boat, right? Once you buy that, that's not the end of your cost. There's costs to maintain it, maintenance, service, replacement parts. And I know it's software, but it's the same thing in the sense of, how much money does it cost you? Not just what do you pay a software vendor, but how much money does it cost you to actually run that software? Like how many people are devoted to that? How many managers, executives have to spend, an hour, 5 hours a day? What does that actually cost you to be the ones that have to manage and maintain technology? And then
go ahead.
Then you can understand like then you put the technology cost, and then you can understand, this is what it costs me to run this technology, right? And so I think people are trying to lower their costs right now, and that's what people need to really start defining what it costs them to run their software.
So let's dive into that a little bit deeper, because a couple of the areas that I see a lot of people don't really understand the total cost of ownership. One thing that I've seen happen, especially with larger lenders, is as they've acquired different lenders over the years, and as they have different channels. I've got a consumer direct channel, I've got a retail channel, I've got a wholesale channel. Most of the time, those other lenders they acquired have different technology, and they've often allowed those other entities, the consumer directs, the retail, to purchase their own solution. Let's use CRM, for instance. I know that is your wheelhouse. Well, total cost of ownership for a CRM, if you're now running 3, 4, 5 CRMs, is very, very costly. Talk to me about why having like one platform is critical. And then I have some more questions on, total cost of ownership as well.
Yeah, I mean, I guess there's a handful of things. One, let's just say, I mean, I'm actually, I think the industry spends as an aggregate too little amount of money on technology. Most lenders do. So it's not even necessarily the cost that you can lower, which you can. If you have 5 different CRM platforms or you're managing, it's going to cost you a lot more money to run. And that's been our industry. You haven't had platforms that can serve all the different markets well, right? So then you have a lot. It costs a lot, but the real other cost of it is kind of what ROI are you getting out of that? Because if it's not all working together, you're not going to have any expertise in it, right? It probably doesn't have, the reason why it doesn't all work together because it doesn't have the flexibility to work in different industries, if you will, or different segments and channels, which probably means it might not have the flexibility to do the things you want it to do. Every lender, our lenders, we say 80% are all the same and 20% have something they all want to do different.
Yep.
So you have to, do you provide flexibility to do that? And I think our solutions in the industry haven't had that. So I think some of the cost it's just inefficiencies as well. I mean, the MBA study I think it was $12,000 cost to produce a loan last year. I think it was something that.
Yeah, it was right in that range, 11 something, almost 12. I mean, and that's crazy for all of the advancements in technology. We have still not been able to lower the cost to originate a loan.
Yeah, I think it was $1,000 or $1,100 was the average technology cost per loan. So you got $11,000 other dollars going to, and half it was human capital.
Capital, yep.
Yeah, so you have to have, because companies are inefficient, you have bad data coming in, going through the pipeline, processors, underwriters, there's so much errors that happen because it's just people aren't synchronized. So I think if people were to spend their money in the right places efficiently, they're going to really, and we have lenders that are doing that now, right? I can tell you, I have lenders that made money last year. I have lenders that are growing, right? And, but they're doing these things. They've been doing them. They're the ones that are, I look at our reports, they use all of our APIs and webhooks, in the millions every single month. It's insane how much they do, but they're the ones that are actually using technology to save them, or to save them money. And they're not spending $12,000 cost to produce. They're much less than everyone else is.
Let's talk about one of the other things I hear quite a bit as it relates to total cost of ownership. Lender goes out there and they buy what I'll call a generic CRM, right? It's a CRM platform that can handle all kinds of different industries and everything like that. And people's like, oh, that's awesome. It can handle insurance, and it could handle, my car wash down the street, and it could handle, whatever. And because it handles all of those, it's very popular. A ton of people use that, and they think that's the route to go. But as I talk to you and as you dive deeper, one of the biggest challenges is there is a huge knowledge void, because when you create a generic platform trying to serve 30 different industries, you can't be mortgage specific. You can't be consumer direct specific. You can't be wholesale specific. You can't be retail specific. So it adds a ton of cost for people to either have to get all of that built within the system or hire staff. Talk to me a little bit about that, because I know you've had that conversation with a number of lenders lately.
Yeah, I know. I mean, I'll just say we've been winning, the biggest CRM in the industry anywhere in all industries is Salesforce. And,
Yep.
A lot of lenders, mid-size and larger lenders, have been trying to use Salesforce for a long time in the mortgage industry. And the cost to do so, it's massive. And it's not just, again, I'm going to say it like this. It's not just the cost, it winds up becoming extremely expensive, because what you don't realize is there are so many little things that you have to build to be able to do what you want it to do with the mortgage. All the rules, integrations into Encompass, everything you can think of, state licensing, is that important to you? All these disclosures, there's so many things you have to build, and that's a massive amount of cost to maintain and run. But then it's not just that. What I like to say, it's like the brain trust of the organization. How many people do you have in your organization that have the capacity to really think about all this stuff, because it's complex? And would you rather them do that, or would you rather them be looking at your pipeline and your demographics of who you're selling to and trying to figure out how you can convert better, or look at your secondary market and seeing how you can, make more on your trades? Like, use your mental capacity for those things, not to try to figure out, oh, I got to create a permissions rule-based thing that allows permissions on these things, all these little side things, which you have to go do and you have to go build.
Exactly. And I think when people look at it, they're only looking at, well, how much am I paying for that license? And it's so much more than just that original license fee. It's how much am I spending to maintain it? How many people on staff do I have? And to your point, how many executives have to be pulled in, and what is their time worth when you start pulling them in and realizing, well, I've got to build all of these little nuances out. Great conversation so far, Josh. And I think it's critical. I know our listeners want to know, they're taking down notes of, how do I determine total cost of ownership? I've got to look at the upfront cost. I got to look at the maintenance cost. I got to look at the ongoing maintenance cost, integration cost. How do I connect the systems together? So we're talking total cost of ownership, and I think people are starting to realize, I really got to start looking at this. I can't have 5 CRMs. I've got to look at, can I have one CRM? I can't have, 10 LOSs, because every one of the companies we acquired or the different divisions like that. Talk to me about, historically, the mortgage industry really hasn't had a CRM that can handle all lending channels, including things like recruiting, which isn't technically a lending channel, but it's a business channel that people want to use CRM technology for. So tell me kind of what was your vision and how you've approached being able to serve all of those different channels.
So when we built Insellerate, we, really went out to the market and looked at what was, I'd say industry best practices of how to build things. We built a multi-object database. We built something very similar to what you would go out to find at a Salesforce or Microsoft Dynamics by having the flexibility of data movement and different objects. So we built a real CRM, like, an actual CRM you can manage. And I mean, we sell Insellerate through Insellerate just because it's easier for us to run it through than any other CRM we've ever used. So the flexibility is very much already, it was just built when we originally designed it. We just thought about, hey, listen, if we want to use this for other industries ever, or if we just want to be able to use it for, and I did in my own practice, my own bank, I use it for my processors. My processors and junior processors use my software to help them alert tasks. I need flexibility, make sure we build the flexibility to do whatever we want with it. And we did. So what that meant was, and this is actually, it's interesting, we weren't actually that aware of it until recently, and we started winning some large wholesale lenders and taking them from other current CRMs in the marketplace, and then keeping them from going to, having to go build their own, saving them the money of building their own, right? It's just that doesn't, that some of the technology that we had and what we built with the TPO piece, we didn't realize wasn't in the marketplace. And what we had done in our system is most CRMs out there, if you look at it, you have like what's called like one object, meaning you have a record. That record is whether it's a borrower or a real estate agent or a loan officer you're trying to recruit. It's one object, right? Now you may be able to put it in different views, but it's one object, which means things like deduplication, distribution, timers, and all these different things have to be common across all those objects. So the way you'd run a business to business is not the same. And the way a loan officer wants to deal with and interact with their real estate agents and manage real estate agents is not the same as a borrower. Yep. So we built a second object. So we have, a borrower object, and then we have a partner, basically third party object that can be a partner, real estate agent, TPO customer, and that has its own workflows and timers. So you can have the same system, but two completely different experiences, roles, processes. And that's I'll just tell you this year, that's helped us with winning customers is they're looking at, all right, so I either have this system a big company who I had to pay a lot of money for. Now I have all these people to try to maintain it. I have to think about it. What's the cost of doing that? Yep. Right? Like, what are my options? Do I go somewhere over here, or do I have to maintain these three different CRMs? And I don't really ever get the power of expertise if I'm running three different CRMs, because to have the power of expertise, you're going to have 3 times the cost, right?
That's right.
So you just don't ever get it. So versus having, one, and you have the power of expertise, because it's going to be able to, whoever's working on that system is going to be able to leverage that across all the platforms.
Exactly. Well, and I think that is critical as people are truly looking at, how do I address the total cost of ownership? How do I now start creating a sustainable model where there's profitability built in? And you've mentioned a number of your clients are profitable because they've already started doing that, and you're getting a lot more interest from a number of lenders out there, especially some very large lenders who are stuck in some of the challenges that we talked about. They have 3, 4, 5 CRMs, or they're lending in 6 different lending channels, and everyone's using something different, or they've now had to configure it, and that cost keeps rising. They can't afford to paying $12,000 to create a loan. And as you talked about in that study, a lot of the cost, not just the technology, but it was headcount, it was people, it was the resources, and a lot of those resources are going to maintain 3, 4, 5, 6 different systems. So there's great economies of scale in looking at a platform like Insellerate to say, hey, we can handle all of your lending channels. Talk to me a little bit about recruiting, because it's not typically a lending channel, but I know you're getting a lot of questions about people using that for recruiting as well.
Yeah. So that was just kind of happened to be one of our customers said, hey, I can see how this other object sits here. I think I can use it for recruiting. Can I use it for recruiting? And we said, well, okay, what, sure. What are the fields? And, use it for recruiting. And then they basically built their recruiting workflow. And it's like, all right, well, use it for recruiting now. Now we've done some integrations to, I think, MMI and some of the other companies where you can actually pull in loan officer information so they know who closes the most loans in our software, and they can market to them differently than other people. So it's pretty interesting what they've done with the platform.
Well, I love it. And I think one of the other things that you've mentioned to me is now that you're having so many of these discussions with lenders, first of all, in today's market, lenders have to evaluate their technology. And more importantly, they can't just keep kicking the can down the road saying, well, this is what we chose, this is what we're stuck with. They've got to look at what are the new technologies out there. But one of the things that you've done for a number of lenders is really help them analyze that total cost of ownership. What's the best way if somebody wants to kind of go through that exercise with you and your team? How can they get a hold of you? What's kind of the process so that people can really find out, hey, am I spending way more than I need to be? And are there better alternatives out there?
I mean, just go to our website, Insellerate.com. There's plenty of ways to get a hold of us there. You can request a demo, request to talk to us. One of our team members would be more than happy to sit down and go over, really what your technology is, what your costs are, and kind of help you, point you in the right direction. Ultimately, you have to go back and do the work. You're going to have to look at your P&L statement and look at, your IT infrastructure line, understand what all those things are in there. And then that's ultimately your cost of ownership. So, but we'd be more than happy to help you.
Josh, you always have great insights. Kind of, hey, what do you have in store? What do you think's happening for the second half of the year?
I mean, I see lenders gearing up and expecting a busy summer sales season, right? I think there's been still we have a massive housing shortage in America that hasn't changed. That's not going away. So it's still a supply and demand game, and the people need to buy homes. I will tell you something I thought was really interesting. So all those services that are out there, there's currently 9 million FHA and VA loans that are in like the 2s or low 3s they're assumable. FHA and VA loans are assumable.
Okay.
So I've seen some lenders talk about how they're going to work with servicers and try to help them market their products with their real estate agents. But hey, someone wants to sell their house, don't just sell the house. Come here and work with me on the service, and then you can make this loan assumable. And not everyone's going to do it, but it's a very interesting concept of how to now all of a sudden someone comes to buy your house, instead of paying $500,000 at 6.5%, they're paying maybe $550,000 at like 2.5%. And it's cheaper.
Exactly.
So it'll be interesting to see what's
there's a lot of win-wins there where somebody can get in at a lower interest rate, maybe get a little bit larger house than they were originally hoping in today's market. And it keeps people in homes. It gives people the opportunity for home ownership. So Josh, you always have a ton of great insights. I'm glad we had a chance to talk about total cost of ownership, one platform that can handle all lending channels. Thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
Thanks, Michael.